Hi, ladies and gentlemen, it's Danny, and this is Bongo Forex weekly review, weekly forecast and analysis. Now, before all that, I just want to invite you to our new designing website, the bongoforex.co.uk. I hope all of you know it. And it has a new look design that is absolutely attractive, and it encompasses all the necessary information and courses that you need that is going to help you to excel in your trading career. Now we have online courses, all these fundamentals, trading psychology, risk management, demo trading is all there for you. You also have other cool 4 steps on how to learn how to trade Forex. And remember, all of these are being instructed by me, one and only Danny. So please, just heads up to the website. The link is down below in the description on our YouTube channel, and I hope you're gonna enjoy it and you're gonna take and make the most of it. So guys, without any further ado, I simply want to rush on to FX Street and let's look at the economic calendars. For this week, we don't really have, we have a lot of GDPs and CPI news. They're not that interesting. Well, there are quite a few interesting ones, and that is on Wednesday, we have Bank of Canada interest rate decision. That is, it's going to be the same, almost 1.75%, and this is almost the same interest rate almost all countries nowadays they use. You know, we are in quantitative easing. There's a very cheap money around, so, and you know, Canada itself, the economy is struggling, so they're trying their best to make sure that the interest rate is low so as the economy to pick up. So otherwise, we have ECB Draghi speech. I think that was Tuesday or Wednesday as well. It's quite interesting one to listen because that's a bye-bye for a father. The father of ECB Bank is going home. Well, the next one will be the Fed interest rate decision. We expect to drop by 25 basis points from 2% to 1.75%. And guys, this is huge. This is a huge implication to the economy, and you should expect to see stock market doing extremely well. You should expect to see oil to do extremely well, and probably might create a weakness on gold somehow. Also, technically, most traders like to short the DXY if this news comes on the face value, but intrinsic value, there's so many mechanics in there that might affect the price movement of the DXY. Next on Thursday, you have Brexit deadline. Finally, we are on the deadline. It's just we want to see what's going to happen. The deal has been agreed with the EU and Boris Johnson. Now let's take it to the Parliament and further discussion. So let's see. Now, if you're trading GBP, I will advise you do not trade it. Don't trade it if you don't understand economics. Next one, we have BOJ interest rate decision coming up. I think also will be on Friday. That will be quite interesting one also to look at. So guys, thank you. And now we're going to jump on to Bloomberg. Let's see what Bloomberg has to say. On currency category, we have pound traders struggle to unpick headlines and hypotheticals. This is what I've been telling you guys for quite some time now, that do not trade GBP because it's super difficult to understand the Brexit situation. And hence, we have so many metrics happening in the market that creates this massive volatility in the price of GBP. So roughly, that you should avoid to trade. Next will be the gold investors prep for Fed cut bullion trades above 1,500. This is what I talked before. The Fed cut could have massive implication in the market, and so we're gonna look at it later on gold analysis on how we're going to trade based on the interest rate change from 2% to 1.7%. And lastly, we have Erdogan can thank Putin if the Turkey surprises with a big cut rate. Well, this is another, as I said, a lot of countries nowadays, interest cuts is like the song of the world. Everyone has cheap money to boost the economy. So that's an implication of USD Turkish lira. Next is economics. On a bigger scale, let's look at the Fed. Okay, the Fed is seen to cut interest rates next week and then hitting the pause button. Right, so the US consumer sentiment pairs gains and economic outlook dims. So because of strong consumer sentiment, that provides a really positive look on the stock market and also the global growth recovery, not recovery, but continuation. So these interest cut rates, Fed interest rate cuts, also boosts consumer spendings, it boosts business activities. So roughly at the end of the day, we should see a bit of appreciation in the stock market. So as you can see, the drag era is an end. Drag is leaving the ECB. So it's quite interesting. Remember, Draghi is the guy who was involved with the quantitative easing from 2009 financial crisis onwards to today. So you call him the father of cheap money. Let's see what if Lagarde is going to do. Next, we see that the China says part of phase 1 trade deal text basically completed. Now, at last, we have something here. Something that almost all traders like. This could reduce the risk in the market and provides us with really good dependability, less volatility in the market. So this trade war is positive right now, and there's a bit of talks, and I think it's the agricultural sector now, agricultural products. They have already completed the deal. So yeah, after that, let's jump onto the charts and see how we can encompass all of these fundamentals to our tradings. That's what the important part is. Now, you may recall last 2 weeks we wanted to wait. We had a bearish to neutral bias, no, bullish to neutral bias on the DXY, and that was because simply the DXY was having a huge correction. Now, if you look at the longer time frame, you can see that all these fundamental factors are like trade talks, the Fed seeing cutting rates, also US consumers as the best economy hopes. Remember, the source of this is Bloomberg, has an implication to the DXY performance. Let's look at the long run. Under the long run, you can clearly see the DXY is still on a bullish trend, and that area I picked that area specifically, 97.23, as a buying opportunity for the DXY. Now, as we have a bit of confirmatory on those candlesticks, the price keeps on shooting higher and higher. Now we're trading at 97.83. Having said that, we're going to see all these currency pairs trading against the dollar being bearish, and that's what we wanted. We want to see all these currency pairs going south, and that's why you may notice in the last 2 weeks I didn't have a lot of opportunities in tradings, because we had this temporary correction in the DXY. So that was against my bullish bias on the DXY. Hence, now the bullish bias is much stronger. I'm going to be more interested to go and short all the other currency pairs against the dollar. Talking about the major pairs: USD, NZD, AUDUSD, GBP and the rest, and the rest, and the rest. So, moving on. So I would like to jump onto gold. Under gold, we're going to have remember, it's quite interesting how we're going to trade gold, because of the an equilibrium between the this interest. Sorry guys, I had a bit of a pause there, because I'm just trying to edit this the charts. We wanted to short the DXY, no, the gold. Unfortunately, it hit our stop loss. Now we see the DXY technically breaking through that particular resistance line. Now we think there's a bit of retest, and then the price should go even further higher. Henceforth, we want to we're quite interested to see gold going anywhere from that level to 1548. So the next we have is the WTI, and the highlights of the WTI is US consumers are the economy's best hope against recession. Second, we have Fed seen cutting rates next week and then hitting the pause button. Thirdly, we have trade talks, first phase talks on agriculture is done. And fourthly, we have supply issues where the oil tanks bombings still continues in Middle Eastern. So all of these sources Bloomberg, so it's something that you can trust. I hope so. And yeah, so let's crack on. Having said that, I'm quite interested to see we had these 3 double bottom, we call them triple bottom, and we wanted to trade just right after that neckline breakthrough, and we entered that trade, and we're looking at almost a lot of pips, almost that will provide us a return of almost 12% and almost 6,874 pips on that trade. It's super interesting because when you trade WTI, you all know that you trade in terms of points, not in pips. So a small move in WTI has a huge implication to it, and that provides super interesting trading opportunities. So well, if you missed that trade last 2 weeks when I gave that signal, simply you just want to see a bit of a pullback. So I'm going to draw a line for you just to show you where you're going to find that pullback. I'll look for that buying opportunity, the next one. We had a bit of first, second, third casing points, and we expect the price to come back to that line, the uptrend line, and that bit of correction. Allow to trade in those corrections because they provide me some really sweet entry points. You don't want to jump at the top of that, like you don't want to buy now, because the problem with that is it will create a bit of correction and you're gonna lose a considerable amount of money based on that. So you want to make sure that you're clinical enough and look for those entry points. Okay, next one is Aussie dollar USD, and for Aussie dollar USD, we're looking for short position. As I said earlier, I want to short everything against the dollar, and then Aussie dollar USD provides me some really sweet selling entries. As you can see from the Aussie dollar USD 4 hours chart, you can see there's a bit of the resistance being confirmed, and the price formulates some sort of a zigzag. All right, so there's a zigzag formulated by the Aussie dollar USD. Now, having said that, I'll be much interested to see where our entry points are going to be at, because that's where our interesting part is. So I'm going to 4 hours, and on 4 hours, I'll be interested to see those to 1 hour to look for those entry points and create those kind of really interesting entry points forward. So if you look here, you have more than 1, 2, 3, 4, 5, 6 casing points. Now clearly that's a really interesting trend formation, and we want to short it right there at 0.682 to 0.67475. Having that short position give us really good risk reward ratio, really tight stop loss right there, an exit point which gives us almost 70 pips, and that's good because if you trade a mini low, that is almost $70. And yeah, cheers up. Next one is just the try, and as I said earlier, Erdogan is thinking of a big interest rate cut, and that has a huge implication on the Turkish lira. On the other hand, the technicals look quite interesting because shorting there will give us some really good profits. You can see we have almost now the third casing point, and that's where we want to short our trade. We want to sell it around those areas and to the level of 5.65801, and that provides us really good entry point. Almost done here, guys. Now we're gonna look at the Euro GBP. Now this is the trade of the month. We see trading it, and I want to short it right there. And yeah, so it's just a simple one. I won't highlight much about it. We had so many analysis on the trade of the month, especially the Euro GBP, and it's something that I still hold true. in terms of shorting. We had a really good risk reward ratio. The first one 7.81. The first trade we hit almost 4 risk reward ratio. We already closed that trade. We opened the second one, now we open the third one, and it's almost getting confirmed. The last trade was 10 risk reward ratio, and it's almost 90% confirmed to close that trade. So the rest we have to do is just to be patient on that trade and see. Basically you have to close it. So if you want to hit the scraps, and if you miss those opportunities on the Euro GBP, you want to short it around those areas, and yeah, you're gonna get a bit of scraps, but yeah, it's too late. It's quite too late. You've reached our destiny. You've reached our finishing line for the Euro GBP, and thank you so much for all of you guys who paid attention to Trade of the Month. Otherwise, guys, I wish you all the best on your trading, and good luck, and trade safely. And remember, guys, do not overtrade, and risk management is really, really important for you. And yeah, cheers, ladies and gentlemen. Thank you so much. So the next we have is the WTI, and the highlights of the WTI